Welcome to the Daily Market Recap. Today is Thursday, July 16, 2026. All right, let's dive right into it. Today was a bit of a rough ride on Wall Street, primarily driven by a massive hangover in the artificial intelligence and semiconductor spaces. After months of throwing money at anything with AI in its name, investors decided to take a breather and lock in some profits. The heavyweight tech giants took a beating, pulling down the broader markets, despite the fact that more individual stocks actually rose than fell today. Talk about a top-heavy market problem. The S&P 500 slipped about 0.5%, while the tech-heavy Nasdaq got absolutely hammered, dropping 1.5% by the closing bell. The blue-chip Dow Jones wasn't immune either, slipping a modest 105 points. It's clear that the AI hype train hit a temporary speed bump today, proving that even the mightiest tech bulls need to rest their legs sometimes. Looking at the sectors, it was a classic case of out with the new, in with the defensive. The information technology and semiconductor sectors were the clear bleeding hearts of the day, acting as a massive anchor on the major averages. On the flip side, healthcare showed some serious muscle. Medical giant Abbott led the charge, skyrocketing over 10% after blowing past Wall Street's profit expectations. Financials and energy also stood their ground, with big bank earnings continuing to look solid and rising crude oil prices keeping energy stocks afloat amid escalating Middle East tensions. It's a fascinating sector rotation. Investors are running away from pricey chip stocks and hiding out in steady cash-flowing defensive plays. Now let's check in on the market vibe check. The Fear and Greed Index clocked in at 42 today. Yep, we have officially crossed over into fear territory. Just a couple of weeks ago, everyone was drunk on optimism, but today's tech rout has investors biting their fingernails, playing it safe, and second-guessing their aggressive growth strategies.
Our top story today is the global tech sell-off that shook portfolios from Tokyo to New York. The red-hot artificial intelligence boom faced a serious reality check as chip makers and major AI winners faced aggressive profit-taking. Major international indexes took a massive hit, with Tokyo's Nikkei plunging 2.8% and Shanghai dropping 1.8%. Traders are starting to question whether valuations have run too far ahead of actual earnings.
While the long-term AI thesis remains intact, today was a stark reminder that what goes up like a rocket can occasionally come down like a rock when institutional investors decide to press the sell button all at once.
Story number 2, the economic data dump was a mixed bag that gave both bulls and bears something to chew on. Retail sales came in softer than expected last month, showing that consumers might finally be feeling the pinch of sustained high interest rates. However, if you strip out gas stations, consumer spending remains surprisingly resilient. To add to the confusion, initial jobless claims dropped to 208,000, indicating that the labor market is still rock solid, while the Mid-Atlantic Manufacturing Index blew expectations out of the water at 41.4. It's a confusing puzzle for the Federal Reserve, which is trying to balance a strong job market against slowing retail momentum. Finally, escalating tensions in the Middle East have injected a heavy dose of anxiety into the global markets. With geopolitical uncertainty rising, investors quickly flipped the switch to risk-off mode. This drove a flock to traditional safe havens like gold and pushed WTI crude oil prices back over the $80 a barrel mark. Unfortunately, riskier assets like high-growth tech stocks and cryptocurrencies bore the brunt of this anxiety, experiencing swift pullbacks as traders de-risked their portfolios ahead of the weekend. In times like these, cash and commodities become king. Let's pivot over to the individual names that absolutely stole the spotlight today, whether for glorious rallies or catastrophic plunges. On the winning side of the board, our top gainers today were CDNA, Ataiman, Mass. Leading the pack was CareDx, trading under CDNA, which caught a massive wave of buying momentum. Right behind it was Atai Life Sciences, sparking immense retail interest as its biotech trials caught the market's attention. Manpower Group, ticker MAN, also enjoyed a stellar post-earnings pop as corporate talent demand proved sticky, while Moz America, ticker MAS, rounded out the top 4 with an explosive double-digit move. In a sea of red, these 4 tickers were absolute beacons of green hope for the bulls. Now, for the painful side of the ledger, our top losers today were ASTSF, MXL, BB, SKHY. Space-based cellular network player AST SpaceMobile, ticker ASTS, took a massive hit as profit-taking turned into a stampede. Chipmaker MaxLinear, ticker MXL, got crushed as part of the broader semiconductor bloodbath. BlackBerry, ticker BB, also lost its footing as tech weakness spread, and Skywater Technology, ticker SKHY, plunged hard, feeling the severe squeeze of the chip sector rout. If you were holding these today, it definitely wasn't a fun time, but keep an eye on these levels for potential oversold bounces. Let's break down the technical charts, starting with the big dog, SPY. After today's minor pullback, SPY closed right around 749-point den. For the bulls to regain total control, we need to see a decisive break above the immediate resistance level at 755. On the downside, all eyes are on the critical support level at 745. If 745 fails to hold, we could see a swift slide down to the 50-day moving average near 738, which would open the door for a deeper correction. Next up is the tech barometer QQQ, which closed at 702.88 after getting slammed by the chip sell-off. The technical damage is real here, guys. QQQ faces heavy resistance overhead at 710, and it needs a strong tech reversal to breach it. Looking down, immediate support sits right at 695. If the tech rout intensifies and we break below 695, the next major structural safety net doesn't arrive until the psychological 680 level. Keep a very close eye on the volume here. Finally, let's check out the small caps through the lens of IWM, which held up remarkably well compared to its tech sibling, closing at 295.19. Small caps are benefiting from the sector rotation out of mega cap tech. IWM has clear resistance sitting up at the 300 milestone. If it can break through that psychological barrier, it's blue skies ahead. On the downside, solid support is firmly established at 290, followed by a deeper floor at 285. IWM is looking like the relative strength leader right now. Moving over to the digital gold rush, Bitcoin remained relatively flat today, keeping traders on edge around the $64,975 mark. The crypto king is feeling the weight of macroeconomic risk aversion, but it's putting up a solid fight. For a major bullish breakout, BTC needs to clear heavy resistance at $66,500. On the flip side, if the sellers push hard, look for strong support down at $64,000, with a critical macro floor sitting at $62,500. It's a classic waiting game right now. Ethereum is showing a bit more drama, trading near $1,896. While the recent momentum has been fun, technical indicators are flashing a warning sign. ETH dominance has hit the peak of its daily cloud with an RSI sitting deep in overbought territory above 85. This suggests that the immediate upside might be capped near the heavy resistance at $2,000. If a healthy pullback occurs, look for immediate support to step in around $1,820, followed by a stronger floor at $1,750. As for the broader altcoin market, it was a pretty painful session with Middle East tensions driving investors away from speculative assets. The altcoin space experienced widespread bleeding. Total altcoin market capitalization pulled back significantly as liquidity dried up. Until Bitcoin stabilizes and breaks out of its current consolidation range, expect altcoins to remain highly volatile and sensitive to macro headlines. Keep your position sizes smart out there. Wrapping things up, the overarching market sentiment heading into tomorrow is definitely leaning toward cautious and defensive. With the fear and greed index sitting at 42, the market is vulnerable to further headline risk. Keep a very close eye on the continuation of high-profile corporate earnings reports and upcoming housing data releases, as these will dictate whether the bulls can stage a comeback or if the bears will dig their claws in deeper. That is a wrap for today's market breakdown. If you found this update valuable and want to stay ahead of the game every single day, do me a huge favor. Smash that like button, hit subscribe, and turn on those notifications so you never miss a beat. Drop a comment below with your trading plan for tomorrow. Happy trading, stay disciplined, and we will see you right back here next time.